Hello everyone, welcome to the channel. André Cardoso here. Thank you very much for being here. It's a pleasure to share my work with you. For today I want to cover a couple, actually not just a couple, I have a full list of charts to share with you. I believe we are facing very interesting price zones in some of these pairs, so I want to share with you a couple of those patterns. So let's start with the pound versus the dollar. Of course, we are talking about a cable. Since last week, the pair remains under pressure at 127.20. So this is the golden 61.8% Fibonacci retracement level, and since then the price was not able to trade higher. So we have a range between 127.33 and 126.03. So this is the most recent fractal support level. I believe that a breakout of this support level should force a move to the downside, so force a pullback eventually towards these Fibonacci retracement levels, 125.68, 124.66, eventually a retest of the previous resistance. Ultimately, we are facing a step-by-step process towards the previous resistance level. Let's observe how the cable unfolds these potential or eventual cup and handle pattern formations. We are far away from that pattern to confirm, of course, but it's a step-by-step process. Eventually a new pullback, finding new support, and then the market starts to rally again. Let's see how the market will behave now that we remain with the golden Fibonacci under pressure. The same thing may happen for the euro versus the dollar. In fact, the euro already pulled back a few more points than the cable. We have a fractal support at 108.28. I was expecting a bounce, and I still expect a bounce from this price zone eventually, just to form a right shoulder, and eventually we will see that pattern starting to unfold if the price breaks the most recent support, as I said, positioned at 108.28. So it's just one of the possibilities. Of course, I have my highs on this bullish shark pattern projected at 107.51. So this is also actually we can see the perfect convergence or confluence between the golden Fibonacci extension and the 200% Fibonacci extension level. So this is the default target for the head and shoulders pattern formation. So I will expect some reaction to the upside if the price achieves these levels. The Australian dollars, that's correct, also facing the 200% Fibonacci extension level. This is the default target for this cup and handle pattern formation, and since then the market was not capable to trade higher. Also, we have a new higher high at 66.90 at the start of the week, starting the week with the new highs. But since then the market was forced to pull back. We are far away from this bullish shark pattern, as we can see, but one thing may guide us to another. We have signs of bearish divergence. We have a nice fractal support at 65.71. A clear violation of this fractal will confirm this as a false breakout above, and that should potentially guide us to a move towards the golden Fibonacci extension level. So that's always the Fibonacci extension level that I will search for support in this case. Of course, eventually in an inverted situation I will search for resistance. So golden Fibonacci extension 64.97. If that happens, of course, we are, as I said, we are very far away from that to happen. Actually, the market can keep rallying higher, keep trading higher with a breakout above, ignoring the signs of bearish divergence. Now let's jump into the Kiwi, a bit more interesting in my point of view. We have a bearish shark pattern, a bearish crab pattern at 62.30. That pattern requires a new higher high, just a new high above the previous or the recent highs of the session, 62.22. So this is the most recent highs. We have a pattern projected at 62.30. So just a few cents above. But that requires a new higher high. This can unfold into kind of a three drives pattern formation, eventually a new higher high. But I will expect some kind of a pullback if that happens. We may see this as a three drives pattern or an ascending wedge, and the breakout above may guide us into, let me try to pick, may guide us into a move to the downside. So I will expect a breakout above the recent highs, printing a new higher high, and then I will wait for this pullback. Then we have the Australian dollar versus the New Zealand, and this is another one very interesting because we have a price action suggesting the inverted heads and shoulders pattern formation. We have a nice fractal at 107.67. We have nice support at 107.02. So remarking our invalidation point for these, let's say for these inverted edge and shoulder. So if the price breaks above the resistance, we will expect a move towards 108.33. This is equivalent to the 200% Fibonacci extension. Otherwise, we will continue to trade lower. If the price breaks below this support, that will favor more downside momentum, and I will pay attention to the specific pattern projected at 105.82. Immediately below this fractal support. We have other patterns projected above the previous support, but I admit if the price starts to approach these lows, eventually we'll hunt all those stops positioned below. So I will, instead of searching for this pattern at 106.60, I prefer to wait for 105.82 projected below the support level, and that may allow me to manage my risk. Then we have the dollar versus the Swiss franc. We have two levels to consider. I shared one of them last week, 107.08749. So this is the golden Fibonacci extension of the last swing high. I was expecting some pressure at these levels. As we can see, the price did not felt that pressure that I was expecting. We have signs of bullish divergence between the previous lows, the recent fractal support at 86.84, and the most recent lows of the session at 86.67. So we have that small divergence right there. So pay attention to a violation of the fractal resistance 87.71 that may guide us to a move to the upside. We are right above this bullish bat pattern completion point 86.31, and the formation of this pattern will suggest a bounce. Let me try to adjust this retracement level basically to the same price zone. An attack to or a retest of this previous structure support level, I will not ignore that if this bullish pattern unfolds. Then the dollar versus the Canadian already printed a new bullish, actually multiple patterns, as you can see here. We have a bullish butterfly pattern at 127% Fibonacci extension, this higher degree bullish butterfly, and we have the golden Fibonacci extension level 34.92. So this is the bullish crab pattern, this green pattern completed at this price zone. So we have that convergence or this confluence between these price zones for these patterns. I will expect a move towards the 38% Fibonacci retracement level. That suggests a move equivalent to 100 points above the recent price. So that means we are talking about a potential 147, 150 points for these patterns if the market achieves the default target levels. Dollar versus the yen already threatening the structure support. Let me increase my time frame here. We have a nice support holding these previous lows under pressure at this moment. We have also the daily fractal at 147.15 also under pressure, but we are also at the 38% Fibonacci retracement from this last swing high. So we are facing the very first Fibonacci level of interest, of pressure, 146.33. This is the default target for this bearish crab pattern completed at 150. I projected these patterns before. I believe you can find these patterns on Twitter and my previous content and on my blog post. If you wish to search there, you can also identify these patterns before the completion, which allows me to manage the position sizing for these trades and to manage my risk conveniently with time to prepare myself to these events. That being said, we have default targets for this bearish bat pattern at 142.50, so this is the default target level for the red bearish bat pattern. As I said before, we are already trading the default target zone, the first target for this bearish crab pattern at 146.33. There's a second target for that pattern projected at the golden Fibonacci retracement, 142.86, which points to this 38% Fibonacci retracement level. So that creates kind of a cluster box or a confluence box between those Fibonacci levels. I want to see how the market will achieve these levels. The euro dollar, the euro versus the Japanese yen, another one. This is very interesting because we are facing the 78.6% Fibonacci retracement of all this swing to the upside, and I'm measuring this swing because this is the swing that measures actually that we can see the breakout of this structure giving sequence to this to the formation of a new higher high. So if we measure this swing and the retracement of that swing, we are facing the 78% Fibonacci level, but we have other patterns that I will pay special attention. The 113% Fibonacci extension at 156.83. So we are far away from these patterns for some of these patterns to start to unfold or start to form. I just like to be prepared for those eventual situations. So we are far away from those patterns, but I'm projecting this. This is my price zone, my zone of interest for this pair, euro versus the Japanese yen. The same may happen for the Australian dollar. We have also the golden Fibonacci at 98.04 acting as an element of resistance. I'm projecting a symmetrical pattern right below this fractal support. This fractal support is acting as a neckline for the technical double top. Clear violation or a clear breakout of this support may trigger a deeper pullback or a deeper move to the downside. That being said, we will pay attention to that move, and specifically 95.77. So this is the golden Fibonacci extension level and the completion point of a bullish crab pattern right there. And we have a few points below. We have the 200% Fibonacci extension, which is the default target for the double top. So as soon the price approaches this price zone, we should pay attention to those price reactions. The same may happen for the pound versus the Japanese yen, already trading below the previous support levels. I have a pattern projected, the bullish alt-bat pattern at 183.91. So this is my bullish alt-bat pattern that I want to see the pound forming. The New Zealand versus the Japanese yen, we have what we may call a three drives pattern. That pattern may suggest a visit to this previous resistance level again. Eventually, that's what the pattern suggests, a visit to the previous lows or the lower lows of the pattern. I will expect that to happen eventually. If the price breaks lower, we will pay attention to 89.77. So this is the confluence zone between the 38% Fibonacci retracement and the golden Fibonacci extension of the last swing high. That completes the bullish shark pattern at the golden Fibonacci level. And to finish with the yen pairs, the Canadian dollar, also approaching the previous support 108.06. A clear violation of these levels may trigger a move to the downside, and I will pay attention to the formation of a bullish alt-bat pattern at 106.87. Let's see how the market unfolds during the next sessions. The euro versus the pound, we are already trading the golden Fibonacci extension level. This pattern was projected at 85.77, so we may see a period of consolidation in now that we achieved this price range. I will not be surprised to see a push to the previous resistance level, eventually 38% Fibonacci retracement level. That's the default target for that pattern, even though eventually we will see the price entering into a consolidation process. It may take some time for that move to start to unfold. Eventually it will not, and because if that starts to unfold as a bearish flag pattern, we may expect more downside momentum after completing that pattern, but we don't know what will come. It can form a parallel channel, it can form a descending channel, a triangle, whatever. I believe it may unfold into some kind of a consolidation process, eventually being pushed to this previous resistance. Let's see how the market unfolds. We have also other patterns that may offer nicer or friendly risk-reward opportunities. If you want to try the bullish momentum for this pair, I believe you should wait for the 224% Fibonacci extension. It's very close to the previous fractal support, which allows us to manage our risk more properly. Then we have the we have euro versus the Australian dollar. Very close to the 113% Fibonacci extension. 162.53. This pattern will suggest a move to the upside. Of course, an attempt to recover the recent losses if some of these patterns starts to unfold. Though we have multiple patterns projected between 62.53, 62.08. So we have kind of a cluster box right there between golden Fibonacci extension and the 113% Fibonacci extension levels, and the formation of these patterns may suggest a bounce. Euro versus the New Zealand, very much the same situation. We are far, not so far, but we are threatening the previous support level, the monthly fractal 175.07. We have patterns projected at 73.57, so we need to wait for a new low at least in order to complete this eventual bullish shark pattern. This one projected at 224% Fibonacci extension level. The pound versus the Australian dollar, we can see this as a head and shoulders pattern formation. I've already mentioned this possibility before. This is our next zone. We have a weekly fractal at 88.98. So I believe that a breakout below these levels may trigger a move to the downside. We have also another pattern that I projected based on the recent ratios or variables. We can project a pattern at 86.36. Let's see how the market will behave if if the price reaches this zone. But even though we have also the default target for that head and shoulders pattern at 180.46. And in fact, as we know, the price will not go directly in one single candle directly to our target zone, so don't be surprised to complete this sequence, retesting the previous neck zone, the neckline, and then the price giving sequence to the head and shoulders pattern formation. So actually this pattern may trigger a retest of the neckline, validating the pattern. If the price then later starts to reject the neckline again, that's the time to take profits or take advantage, let's say, of this eventual profitable pattern and reversal behavior. The pound versus the New Zealand, also far away from the previous monthly fractal. We are moving towards those levels, at least I believe so, and we have a couple of patterns that we should pay attention to, specifically the one projected at the golden Fibonacci extension level. This one may help reinforcing this descending channel, the support of the channel, and if that pattern completes, it will also target the 38% Fibonacci retracement level, and in this case we have a perfect convergence between the monthly fractal and the 38% Fibonacci level. So we are far away from this pattern to unfold. As you can see, we are basically 600 points above the formation or the completion point, but I believe that one step after another. So if the price breaks this previous support level, that should trigger a move to the downside, and we can of course try to take advantage of this move. And if the price achieves the 161.8% Fibonacci extension level, that will complete a bullish sequence, a bullish pattern. So we may expect a reaction to the upside. So if you trade these to the downside, you should take profits, and you should avoid to deliver back all your profits, because that can happen. Okay, so that being said, pay attention to the move to the downside initially, and then if the price completes this sequence, pay attention to those same sequences. DXY, the dollar index, I projected this symmetrical ABCD pattern earlier 2 weeks ago. 103.45, we have a nice reaction to the upside, new fractal resistance 104.21, rejecting the idea of a move or a recovery for the DXY, and new lower lows 102.46, new fractal, new daily fractal support already printed for the dollar. We have a nice move to the downside inside these descending channel, so I believe in while we stay inside this structure, we should not try to anticipate any type of move. First of all, I don't have any other patterns suggesting a move to the upside, at least for now. I need to see a couple of more sessions or a couple of more price action to try to dissecate these DXY chart. The only thing that we have is these bullish divergence signs, but as we can see, as soon the market presents us with bullish divergence signals, as fast it was forced to retest the highs, at least on RSI. Look at what happens on price, rejecting the idea to approach the previous highs, the previous resistance, and starts to form a new fractal and starts to retrace again. It can trade higher from here, but pay attention to this moving average. As soon the price touches that moving average, it may feel some pressure, and if you want to measure this as a potential retracement from these lows, we can also track the retracement levels. As you can see, we are now facing the very first Fibonacci retracement level, the 23% Fibonacci level, 103.61, the 38% Fibonacci 104.33, the 50% at 104.90. So I believe this 50% may put some pressure on the dollar if the price achieves these levels again. Now, Let's jump into some of the commodities, specifically gold, silver, crude oil, and let's jump into a higher time frame because I shared this chart before last week, and with a very decent projection for the dollar, for gold. I'm sorry, with a projection at 21.26. So this was the formation of a symmetrical pattern, which means the previous swing high, it's equivalent to the last one, and as soon the price completes that sequence, it starts to pull back. And we saw a few traders questioning what was this move on gold, why the reason why the gold moved so high at the start of the sessions this week. 21.48, so this is our new higher high for gold, and as I said, we expected a reaction after the formation of this pattern, and that reaction can push gold back to this price zone again. So basically back to the weekly fractal resistance 2009. That's the price of the previous resistance level. We have 2020, the 38% Fibonacci retracement level. Let's see how the market will behave. At least this is the reaction that I was expecting. Eventually the market will be forced to trade higher at some point. Attention to this cup and handle pattern formation. So we are now threatening the violation of the highs of the pattern. I will not be surprised to see, kind of a pullback, and then at some point the market breaking higher, giving sequence to this move to the upside. We have targets at 24.75 for gold if that pattern starts to unfold. Pay attention to that possibility. Silver, let's go into a lower time frame on silver. Let's reduce to 12 hours time frame chart. Bearish alt-bat pattern also completed on silver, 25.58. So I will not be surprised to see the retracement from this price zone back to the 38% Fibonacci retracement level. That's equivalent to a 6.5% retracement on silver. Let's see how the market will behave after the formation of this pattern. This is the default expectation we have after the formation of that pattern. Crude oil, of course, if the dollar versus the Canadian, as I said before, starts to bounce from these patterns, after completing those patterns, we may expect more bearish momentum for crude. We're still trading above the weekly fractal. Everything is possible. I will not ignore the possibility for crude to bounce from this price zone. Of course, that will force the Canadian dollar to trade lower, or the dollar versus the Canadian to trade lower. Actually, the Canadian dollar will get some strength. But of course, if that happens for the dollar versus the Canadian, the crude oil may be forced to trade lower. One of the patterns that I will pay attention to, the $67 a barrel. I believe this was pointed as by the United Nations as the ideal price range for the price of the barrel. Let's see if the price will trade, if crude will trade at this price. At least those were the expectations during last week meetings. But we are facing strong support. I believe I admit that a breakout or a clear violation of this fractal support will trigger that move to the downside. Now let's talk about the SPX 500 bearish shark pattern completed at 45.83. I've already mentioned it before, this pattern multiple times. Actually, we started to project that pattern as soon the price breaks above this resistance. 45.83, we have patterns, of course. This is the magnitude of this pattern may sound tremendous, but that's what it is, 3.6% below the current price zone. That's the expectations I have for this pattern formation. For SPX 500, we can be wrong, we never know. The market can trade higher, and this is the sequence for the German DAX. Huge recovery from this fractal support, an impressive move to the upside, already approaching the monthly fractal, and we have a symmetrical 5-wave structure, impulsive wave to the upside, projected at 16,607. So this is just a few points above the monthly fractal supports, the previous lows from July, on the last day actually from July. A few points above, we have what we may call a projection, a symmetrical projection of a 5-wave impulsive swing, where the 5th wave, it's equivalent, or it's exactly the same in magnitude as the first one. We can see the first wave projected from the lows of the fourth wave, and we can see there's higher highs projected above the fractal resistance, even though we are trading in a price zone where we may consider this sequence completed. A 5-wave sequence to the upside should be followed by a 3-wave sequence to the downside, a corrective move to the downside. Let's see how the German DAX also behave. Government bonds, 10 years, United States, golden Fibonacci extension 4.23%. So this is the golden Fibonacci extension of this last move to the upside, projected below. So I will expect some price reaction now that we are facing this price and Fibonacci level. Nice. We have some signs of bullish divergence. That doesn't mean the price needs to trade higher or starts to bounce. Actually, it can trade a few points lower, printing a new lower low, eventually a third low, printing a 3 drives pattern formation. If the price keeps offering divergence, that may trigger a move to the upside or a bounce to the upside. Let's see how the market will behave. Also, 4.36, actually not the 4.36%, but 4.53. So this previous fractal support was acting as a neckline for the edge and shoulders pattern, and we have patterns projected at 4.11%. So this is just a few points below the recent lows. Imagine a situation where the price prints a new lower low and eventually starts to bounce from this price zone. Let's observe also. Then we have the 10 years T notes also approaching very close to the, actually very close, not so close, actually we are in the midpoint between the neckline and the default target levels for this edge and shoulders pattern formation. I admit there is a possibility to trade even higher, step-by-step process, but at this point I will not ignore eventually the pullback based on the recent signs of divergence that we have now. So I will not be surprised to see that pullback. Then the Eurobond, we are trading above, or actually we are threatening the previous resistance level. We have a couple of patterns to take into consideration. One of them, 132.57, the bearish BAT pattern and the bearish alt BAT pattern. So this is an alternative to this bearish BAT pattern at the 88.6% Fibonacci retracement. As always, the alternate BAT pattern points to the 113% Fibonacci extension level. Every time we trade the bearish BAT pattern from the 88.6% Fibonacci level, we should always take into consideration our risk and consider the 113% Fibonacci extension also. So usually that forces to use a one-to-one risk-reward approach if we enter the market from the 88% Fibonacci level. If we enter the price at the 113% Fibonacci level, that may offers a nice and more friendly, let's say, risk-reward approach and strategy to manage for this trade. Let's see how the market unfolds. We have also signs of bearish divergence, but we have this bearish alt-bat pattern at 134.21. Let's finish with actually let's cover before that and I forgot to cover the Norwegian krone and the Mexican peso before jumping into the Bitcoin and Ethereum. The Norwegian krone, we're still inside this kind of an expanding triangle. This is what we may call a megaphone formation, and we are basically we are trading in the middle of this. We are bouncing from the middle of this range. So everything can happen from this price zone. I will not dare to approach this market at this point while inside these expanding triangle formation. So this is basically a consolidation process, and most of the times as soon as you enter the price to the upside, the market starts to trade lower, and every time you try to trade to the downside, the market starts to bounce. So it's kind of a tricky situation to trade. So I believe it's more prudent to wait for the breakout of this price structure. So that being said, we wait for the violation of the monthly fractal, or we wait for the violation of the daily fractal resistance. One thing may guide us to a move to the upside. On the other side, we have a breakout of the support may trigger a move to the downside. If that happens to the downside, I will wait for the formation of multiple patterns projected between 1044 and 1042. So that's a $2 to Norwegian krone between these patterns. So there's a range of 2 krones between those patterns. The Mexican peso very much the same, not the same pattern. We are not facing an expanding triangle. We face this very strong impulsive swing after breaking above this kind of a parallel structure right there, and then the price was forced to pull back. And as we can see, we are now facing this previous resistance trend line. This structure resistance is acting as an element of support together with the golden Fibonacci retracement. I will not be surprised to see the price trading lower from these price zones. If that happens, I will start to track the possibility to unfold into a bullish crab pattern, very similar to the same pattern that we have projected here for the Norwegian krone in case of a drop to the down, a drop below the support, a move to the downside. Now let's finish with the Bitcoin. Let's go into a daily time frame. As I said before, many months ago, we have this bullish butterfly pattern. That pattern was expected to create a move towards a 38% Fibonacci level. Last week and the week before, I mentioned this channel resistance. Of course, at this point, I will not be surprised that many traders were expecting another reaction to the downside. Nothing surprising on that, very natural. I was actually expecting kind of a retracement again after facing these structure resistance of the channel, but it seems like the Bitcoin is starting to trade even higher. So I will not be surprised to see a move directly to the golden Fibonacci level, 48,630. So this is also the previous fractal resistance from Mars, exactly the 28th. So I will not be surprised to see that a move approaching this fractal resistance again. Let's see how the market unfolds from here also for Bitcoin. And we have Ethereum with a different approach. I have a lower time frame approach for Ethereum. In fact, we have a bearish crab pattern, a deep crab pattern projected at 2276. So if that happens, I will not ignore the potential retracement or pullback if the price starts to react to this golden Fibonacci extension level. And as we can see, we have default targets for that pattern, the 38% Fibonacci retracement level, in convergence or in confluence with the previous fractal resistance, the weekly fractal resistance. So don't ignore that possibility. That represents something like, just to give you an idea of this move, that represents kind of a 6.2% or 6% retracement for the Ethereum. So let's see how the market unfolds also for the cryptocurrencies. That being said, that's all for today. I hope you enjoyed these technical insights and this technical approach, and if you take some advantage from my insight, and if you learn something, just let me know below in the comments. I appreciate being here as always. I hope to see you in the next video. Stay well. See you there.